So today we are diving into what might be one of the most extreme, almost unbelievable days of volatility the precious metals market has ever witnessed. Seriously, the market was on a total knife's edge, and it all boils down to one massive question.
Okay, let's get right into this because this is the central mystery, right? An $8 swing in silver in just a few hours? That is just not normal. It's the kind of move that makes literally everyone stop and ask what on earth is going on here.
So it all kicked off with this just stomach-churning drop. In the overnight session, the price of silver completely plummeted from its recent highs, hitting a shocking low of just $61 an ounce. For anyone watching, it looked like the floor was completely falling out of the market.
But then, wow, an absolutely incredible reversal. The price didn't just crawl back, it rocketed all the way back up to $69. We're talking an $8 move from the day's low. A massive, whiplash-inducing swing in just a matter of hours.
And listen, it wasn't just silver having a crazy day. Gold went on the exact same wild ride. It saw its own dramatic plunge and then this massive recovery. This wasn't some isolated glitch in one market. It was a huge shockwave that hit the entire sector.
To really put this into perspective for you, a chart with this kind of volatility would normally show weeks, maybe even a whole month of trading. But all of this happened in less than 24 hours. This is absolutely not business as usual.
So, what could possibly cause such a violent snapback? Well, the answer, or at least the immediate trigger for that reversal, seems to point to a single geopolitical headline that hit the news feeds in the super early hours of the morning. And this is it. At 4:23 a.m., this message gets posted online. It reads, "I have instructed the Department of War to postpone any and all military strikes against Iranian power plants and energy infrastructure." Now, the market, which had been bracing for a major conflict, saw this and immediately reacted to this tiny glimmer of de-escalation. That potential pause was all it took.
And this timeline just lays it out perfectly. You can see it plain as day. Prices were in a complete freefall. Then, the post hits, and almost instantly the rebound begins. It is a textbook example of just how sensitive these markets are to geopolitical news right now.
Now, it's really tempting to just stop there and say, okay, case closed, right? But that would be missing the much, much bigger picture. Was this one post really the only thing moving the market? Or was it just the spark that lit a fire that was already burning right beneath the surface?
So now we're going to look past those daily headlines to a much deeper, more fundamental story. This is about the movement of the physical metal itself, this great migration of silver that's actually been happening for years now.
Take a look at this. This chart shows the silver stockpiles at the COMEX, which is a major U.S. commodities exchange. And the trend, well, it's undeniable. Physical silver is being consistently drained from these vaults. It's just vanishing.
And that, right there, is the multi-billion-dollar question. I mean, the U.S. government itself calls silver a critical mineral, something essential for industry and defense. So why are its main stockpiles shrinking so fast? Where's it all going?
Well, the answer is pretty simple. It's all going east. Nations like India, Hong Kong, and the UAE are huge buyers. And get this, China's overseas silver purchases have hit an 8-year high. They are quietly but very aggressively accumulating the physical metal.
So this brings us to the really big, long-term picture. The argument here is that all these daily price swings are basically just noise. The real story is about the stability of our currencies versus hard assets, especially in a world with this much debt.
Okay, so let's start with the noise again. On this crazy day, gold was down $111. And yeah, that seems like a big, scary number. In the short term, it absolutely is. But now, let's zoom out.
And I mean, let's really zoom out. This number, that's the U.S. national debt. Over $39 trillion. When you put a one-day price drop next to a number like this, it kind of puts the whole long-term picture into a very stark perspective, doesn't it?
And it's not like this is getting any better. With annual spending around $7 trillion and a deficit of almost $2 trillion, the pressure on the U.S. dollar is just immense. This is the whole foundational argument for holding assets that, can't just be printed out of thin air.
Investor Peter Schiff really sums up this long-term idea with this quote. He says, basically, if you were bullish before, you should be even more bullish now. And the thinking is that all this conflict will just pour gasoline on the fire of these trends, bigger deficits, higher inflation, and a whole lot more financial instability.
Okay, so we've seen the short-term chaos. We've looked at the long-term fundamentals. Let's try and put it all together and figure out what the main takeaway is from all of this dizzying action. And here it is, the most crucial takeaway. You need to get used to this. The days of silver moving 50 cents being a big deal, those days are probably over. We are moving from gentle ripples in the water to massive waves. Swings of $5, $8, even $10 in a single day for silver, that might just be the new reality.
This slide just lays it all out for you. On one side, you've got all the short-term noise, the daily price swings, the crazy headlines, the speculation. But on the other side, you have the long-term signals. Physical stockpiles are draining, national debt is soaring, and there's massive demand from the East. The real key is knowing which one of those stories to pay attention to.
And that leaves us with this one final crucial question. In a world where this kind of volatility is the new normal, what truly holds lasting value? Is it the currency that's backed by ever-growing debt? Or is it the physical asset that's being quietly bought up by nations all around the world? That's the choice this kind of market is forcing all of us to think about.